Right. Hello everyone, welcome to chapter 1 of CPI. This chapter is going to be based around market profiles. In this chapter, I'm going to make sure that I explain everything that there exists about market profiles and how you can use market profiles to change your perspective about the markets. Now, I've organized and designed these chapters in such a way that I'm going to build every single aspect of your trading brick by brick, starting with the basics and fundamental knowledge and then moving on to the advanced and intermediate stages once we build our fundamental knowledge, right? Now, the issue with us trader is that we are in a kind of this predicament that we think that the solution to our trading problem is by making sure to furnish and build our advanced knowledge. But in reality, the solution to those problems is making sure to build your basic and fundamental knowledge as precise and as refined as possible, right? And then moving on to the advanced and intermediate stages once that basic and fundamental knowledge is built correctly and efficiently. Now, when I first started my trading journey, I had the same issue. I gave significance and importance to the intermediate and advanced side of things and ignored the basics and fundamental knowledge, which halted my growth for a lot of time. And then how I solved that problem is by making sure that I start over right from the basics and then build my fundamental and basic knowledge in the most refined and efficient way possible. And then when I did that, everything changed for me because I started to look at the market with a dynamic perspective and my trading problems started to fade away. Now, market profiles is basically a detailed analysis of the market dynamics and looking at the markets with a dynamic, mechanical, and objective perspective, right? Now, there are two ways to look at the markets based on market profiles. The first one being the simpler version, which only takes two profiles or two aspects into consideration and is a more basic way of looking at the markets, right? Now, the two aspects contained in it are a ranging or consolidation profile and an expansion profile. Now, let me explain these market profiles to you before we move on to the advanced market profiles, right? Now, you guys have been taught only the simpler version of market profiles and are only familiar with this one, right? Now, the way how the market moves is that it basically moves either in a ranging profile or an expansion profile. So first of all, we start with a ranging profile, and then after a ranging profile has ended, we then turn into another profile, which is an expansion profile. And then after an expansion has occurred, we cannot have another expansion after it. After an expansion profile is ended, we turn into another ranging profile before making another expansion, right? Now, you can see that based on just this perspective alone, you can avoid half of the market conditions, which are basically lower quality and lower probability conditions, right? Now, your objective as a trader is to take part only in the expansion profiles and only take part in the expansion that occurs in the market, right? And avoid ranging or consolidation conditions or profile. So if you take this into consideration, these profiles into consideration, it basically acts as a huge filter for you to avoid lower probability condition. Now, another way of looking at the markets with market profiles is through an advanced version, and this one takes multiple aspects and profiles into consideration, right? And those are a consolidation profile, an expansion profile, a retracement profile, and last but not least, a reversal profile, right? Now, there's another one as well which I've added, which I'm going to explain later, but first of all, let me explain these aspects to you first. Now, we are familiar with both the ranging profile and expansion profile already, but on top of that, we're going to add retracement and reversal profile. Now, let me show you on the charts. So first we start with the range, right? Every single move in the market start with a range. So when price opens either on the week or the day, we start with a range, and then after a range there is only one possible outcome for price, which is an expansion or an expansion profile, right? Then after an expansion has occurred, we can have three possible outcomes, which are either a retracement, reversal, or in another range. So now you can see that based on market profiles, we've added a filter to our perspective, and based on this we can potentially avoid lower probability market conditions and only take part in high probability conditions. Now for each market profile there is a specific theme, which is that it can only have a certain outcome after a particular market profile, right? Now for instance, let's say if we are in a consolidation or in a ranging profile, then the possible outcome for price is an expansion, right? Now from a ranging profile we cannot have a retracement or a reversal profile, right? The only possible outcome is an expansion. Similarly, after an expansion profile has ended or occurred, we can only have three possible outcomes, which are a retracement, a reversal, and a ranging profile. That means after an expansion has occurred, we cannot have another expansions, right? We cannot have another expansion right away after the expansion profile has ended, right? First we're gonna either wait for a retracement or a range to form and then position ourselves toward another expansion or a reversal. Similarly, after a retracement profile has occurred, we can only have two market profiles, which are an expansion profile or a ranging profile. That means we cannot have another retracement or a reversal profile after a retracement profile has ended. So you can see with each profile we're adding further more filters to avoid certain profiles after a particular one has taken place. Now the significance of this is that it acts as a huge filter for us, right? Now most of you know that 90% of the time trading is all about patience and waiting for the right setup and waiting for them, and then the rest is executing your trade, which means that most of the time you're going to wait for your setup to form, and for it to form at a specific time of the day or at a specific market profile, and then you're going to execute your trade. So if you did not know about market profiles and did not use it in your trading, then you wouldn't have a filter or anything which could make you avoid lower probability conditions, right? Now that's why the first thing that I taught you in chapter 1 is about market profiles, and I made sure that you learn everything about market profiles, so that way you can avoid certain profiles and certain market conditions, right? Now we can even further define this knowledge about market profiles even more and add another profile, which is called the manipulation profile. Now let me explain it to you why it is so important and how you could use this manipulation profile to position yourself in a trade towards a drawn liquidity. Now the manipulation profiles occur or start after a ranging profile. Now with this profile, the market takes both sides of the range and it takes out liquidity and manipulates the trader into a certain direction, and then it reverses in the opposite direction and expands, right? Now with this profile you can avoid getting caught in a manipulation, or what some people call a judo swing, right? Now you can trade this judo swing, but you for sure can never know or measure how far this manipulation is going to be, because let's say you took a turtle soup entry once liquidity was taken or a high or low was taken, then you cannot accurately measure where you're going to put your stop loss, because price can either have a big manipulation or a longer one or a small one, and you cannot measure it, right? It can take your stop loss and then expands your designated direction. So right, so for that the solution is to wait for the manipulation profile to end, and once that ends you can position yourself in the expansion profile after a confirmation has been made in the form of a CSD or a model 1 entry, which I'll explain further in other chapters, right? Now a confirmation for manipulation profile ending is made once price closes below a swing low or a swing high or forms an order block. After that the manipulation profile has ended, and now you can enter a trade and position yourself in the expansion or in the expansion profile. Now as I said before, each market profile can have a particular possible outcome. In the same manner, manipulation profile has also one possible outcome, which is an expansion in the opposite direction, right? And a manipulation profile cannot enter a retracement or a ranging profile or a reversal profile. It can only have an expansion after it, right? That means we've added another filter to our understanding of the market dynamics. Now, another important thing about market profiles is that with market profile, generally you would want to avoid arranging and retracement and manipulation profile and only take part in expansion profile and reversal profile. That's the only two profile which most, if not all of you, should particularly focus on, and you should avoid trading the rest of the profiles. Now, for advanced traders, you can trade the manipulation profile too, but for now and for our betterment and improvement, we're going to avoid manipulation profile and only trade expansions and reversals. Now, as I said before, this is just the basic and fundamental aspects of our understanding of the markets and its dynamics, right? Now, we're going to integrate this concept with other ones like CRT, turtle soup, key levels, and PDRS and build our understanding further while improving together in this coaching program, CPI, right? We'll be using all this knowledge in a conceptual and contextual manner, meaning we're going to use past price action to predict and anticipate further future one, and for that we're going to use conceptual and logical technical knowledge in the contextual manner. That's how we're going to build our understanding. Alright, now let me give you some examples on the charts, specifically on the intraday charts, because after all we are all intraday traders and our predominant focus in CPI is going to be on intraday trading, right? Now, the way how you can use these market profiles to have a dynamic, evolve, and a refined perspective is by integrating it with key opening times, right? Now, you can have these opening times both for the daily open, which is the 17 Eastern time right here. You can use the weekly open, which is the Monday opening time, right? Now, the way how you can integrate market profiles with opening time is by knowing the fact that more often than not and most of the time when price opens, right, or the market opens, price straight away enters a ranging profile, right? Now with that fact in mind, you can straight away expect a ranging profile, and as I said before, after a ranging profile, the only possible two outcomes price can have is either a manipulation profile or an expansion profile, right? Now then you can integrate these market profiles in opening times with other concepts such as the key levels concept and CRT, and then you can position yourself towards your drawn liquidity, right? Now it might sound a bit too overwhelming for some of the beginner traders because they might not be familiar with key levels and all of these other stuff, but you don't have to worry about anything at the moment, right? Now this is just the first chapter of CPI, and I've already explained so much to you in just this first chapter and how you could avoid certain market conditions and take part in other ones, right? Now, as I said before, I'm going to make sure that I analyze and show you how these concept works based on last week price action and current price action, so that way it's going to be easy for you to journal it and reverse engineer it and compare it with your perspective that you had throughout the week and how you could improve it for the next week, right? Now, so we're going to start off with last week price action, and we're going to start off with Monday and how you could have used market profiles to have a dynamic perspective, right? Alright, now you can see right here that the weekly open right here is 17 Eastern time, and as I said before, that after opening time price straight away goes into what? Goes into a consolidation or a ranging profile, and that's exactly what happened here, right? Now you can see that after the opening time price straight away went into a consolidation profile, and then after consolidation profile, as I said before, it can only have two possible outcomes, which is a manipulation profile or an expansion profile, right? And in this case we had a manipulation profile, right? So this was the manipulation profile, and this manipulation profile ended once this candle closed above this swing high, which had taken this swing low and price formed this order block. Now this might sound a bit overwhelming to you, but don't worry, I'm going to explain everything in further chapters. This is just the first chapters, and in other chapters I'm going to integrate CSD with it. We're going to integrate key levels, turtle soup, CRT, everything, so you don't have to worry about anything, right? I'm also going to be showing you live application of it through trade breakdowns, right? Now let's get back into the chapter, right? So you can see that once this manipulation profile ended right here, let me do this, right? Then the only possible outcome after a manipulation profile is what? It's an expansion profile, right? And that's exactly what we had here. So on Monday, what happened is that we first had a ranging profile, then we had a manipulation profile which ended right here, and then after a manipulation profile we had an expansion profile. Then again you can see right here, let's see, you can see that after this opening time and from right here we had what? We had a ranging profile, right? And then after a ranging profile we had a small manipulation profile which ended right here after price from this CSD and from this order block. And then what we had is, first of all, an expansion profile, right? Then after an expansion profile, as I said, we can have three possible outcomes: either a ranging profile or a reversal or a retracement, which in this case was a retracement. And then after retracement we had an expansion, and then after expansion we had a reversal from here, and then we turn again into a ranging profile. So you can see we had an ranging profile, manipulation, and then the only possible outcome for price after manipulation is to expand in what? In the opposing direction, in the opposite direction. And then after an expansion we had a retracement, then another expansion and reversal, right? Now again, right here on Wednesday price action, you can see that after the opening time we straight away turned into a ranging profile, and then after ranging profile we can only have two possible outcomes: an expansion or a manipulation. And in this case we had a manipulation, and this manipulation profile ended right here once price closed above this candle right here, right, and form a CSD. And then after that we had an expansion in the opposite direction, right? And then we had this kind of retracement which turned into a consolidation or a ranging profile right after this opening time. And then we had what? We had an expansion in this case. So after a ranging profile, the only possible outcome for price is either a manipulation or an expansion, and in this case we had an expansion. And then after an expansion we had a retracement, and then another expansion, right? So that's exactly like how the market moves. It moves in these kind of profiles, which either the market moves in a ranging profile, a manipulation profile, an expansion profile, and then another ranging profile. Now the way how you can use it is you're gonna avoid trading the ranging profile and the manipulation profile, and only try to position yourself in the expansion profile and only trade expansions or reversal. So let's see, we're gonna start off with Monday. So on Monday, obviously you would have avoided trading this ranging profile, you would have avoided trading this manipulation profile, and you would have only traded this expansion profile, and it would have offered you this expansion explosive move towards the upside, right? Then on Tuesday, obviously you would have avoided trading this ranging profile and this manipulation profile, and only traded what? And only traded expansion profile and reversal profile from here, right? This is how you use market profiles with opening times to expect certain expansions or to avoid certain market condition or certain market profiles based on others and based on past market profiles, right? Now, as I said, this was just the first chapter of CPI. which was about market profiles, and I've explained market profiles to you in the most efficient and refined way possible. And I hope you've made notes and journal everything, right? Each week we'll have chapters like these, which is going to build your theoretical and technical knowledge, and along with that I'm going to upload and post market outlooks and trade breakdowns for you, which is going to act as a way for you to see how you can apply this knowledge in live markets, meaning live application of this knowledge in theory. And that's how you're going to learn and be coached by me, right? You're going to watch these trade breakdowns and see how you could have used market profiles and all of these other chapters which I'm going to explain in the further weeks ahead of us, right? And your understanding is going to improve by a lot, right? And your perspective is going to be changed completely.